Housing data came out this morning better than expected, but the market just barely yawned. I'm here with Ben Willis from Sunrise Securities. So, Ben, we've had a lot of news out, with the Kim Jong-il dying, but overall the market's kind of,
Yeah, I found it interesting. The market did yawn on the story out of Korea. The story out of Iraq really has me scratching my head. I mean, basically, over Sunday, the Iraqi government said we're about ready to collapse. We don't know which way we're headed right now. Stories out of Iran. So you think that in the big world political picture, we'd be under more pressure, but we seem to be responding more positively to the IMF bailout, even if it falls short of what we thought. It's still progress as far as the EU is concerned. And then, of course, the housing number we just saw. Evidently, the builders think there are going to be more chimneys for Santa this year. So that was a slightly positive number, but there's no volume, and the fact that we're not moving, I think, is a positive in a sense that we're not overreacting one way or the other.
The VIX also has gotten very steady, and it seems like as we've taken some of this risk out of the market, that bodes well for stocks.
Yeah, well, it bodes well in the sense that it should help bring the individual investor who's long been gone from this market for about 4 years to start, hopefully, to tiptoe back in. The money flows is something I keep an eye on to see where the money's going in and out of the mutual fund industry. So we see the 401k, but most of that money continues to go to the mattress of the U.S. Treasury market and not into the equity market.
Right. We were talking before we went on air that, the downgrade has done nothing but good for bonds because everybody still wants them.
If you go back to the first time it happened with Japan, it was actually, I guess, S&P was late to the game, if you want. And the U.S. has definitely benefited from the fear. I mean, I still believe that the U.S. Treasury market is in for a correction. I think it's in for a big correction. I think it's actually, in my own opinion, I think it's a bubble. It's my own position, not anybody else's, but the fact it remains inflated because of the fear in the world and the safe haven that's been sought. Without that, I think we'd be talking about a much different picture in the U.S. Treasury yields.
All right, but it doesn't look like we're going to remove any of those events out of the market anytime soon, so it might be a very long bubble.
No, exactly. I mean, today we had, after the announcement of the leader of North Korea dying, they celebrated his death with launching a missile into the Sea of China. There seemed to be no reaction. I mean, that's basically talk about a shot across the bow. So those are the areas I'd be keeping an eye on, that maybe there's not enough participants in the market to focus on those macro ideas, but they're a little scary.
All right, could you maybe think that this is more of a pure market because all the big players seems to have closed their books and gone away for the holidays now?
Well, no, I'd have to say I don't think it's pure at all. I think that what you have is a traders market, an ETF market, that the large money players, if you will, the mutual funds may be fully invested for now. I don't really know that for a fact, but they're closing their books, if you will. So the only trades that are available right now would be on a volatile trade. If the stock that they like were to trade down dramatically, add to it, or if it trades up dramatically to lighten up. But in between, I think the best for a Santa Claus rally is that the traders that are trading this market look for the market to close on an upswing and trade accordingly.
All right, so we're going to keep our eye on this fairly quiet market. That's Ben Willis from Sunrise Securities.